Today, I want to talk about how the AMC lawsuit will likely be settled this week with Judge Zurn's ruling. I want to explain why this lawsuit finishing is good for AMC and how it removes one of the short's illegal manipulation tactics. So stay tuned and let's make some money. Now I want to dive straight in with the key information. So, this article says, wake up AMC investors. The action in the April ruling is about to hit. It says, for sleepy investors tired of watching this seemingly depressing plot play out, this is the time to pay close attention so you don't miss the action. And it says the Delaware Court of Chancery judge will soon be ruling on the fairness of a settlement, which would allow the AMC preferred APE shares to be converted into AMC shares. After watching the court proceedings, both B. Riley and Citibank are expecting the settlement announcement this month. But this article posted on the 30th of June says that Vice Chancellor Morgan Zurn, the judge overseeing the case, is expected to issue a ruling within weeks. These two articles suggest the ruling is likely this week or next week, but based on the AMC and APE pricing and the options pricing, and also based on the fact that last week was the 4th of July weekend, it's likely a ruling will be announced this week, likely on Friday. This article is also saying that surprisingly, APE stock has been showing very little volatility for the past few days. It seems that most of the traders have already taken their positions based on the upcoming decision. So it's possible that some of these hedge funds and major banks may already know the decision that's about to be released to the public. But Edward Burchuk has also explained why the AMC lawsuit finishing is actually good for AMC. He said FINRA and the banks have been manipulating AMC against APE or APE against AMC since it was released back on August 22nd, 2022. They've been trading them against each other, using them as like-for-like securities, abusing loopholes, derivatives, ISDA, swaps, offshore shells, and more. This is something that I've spoken about in my videos before, how these hedge funds have been using APE shares to satisfy those AMC FTDs. Because obviously APE and AMC are like-for-like stocks. They have different QSIP numbers, but they're effectively two stocks or two forms of share of the same company. And therefore these hedge funds and market makers have been manipulating AMC by using those APE shares as like-for-like securities. But obviously after this AMC lawsuit finishes and APE converts back into AMC, this is another way that the shorts can no longer use to manipulate AMC. They can obviously no longer use those FTX synthetics, and soon they'll no longer be able to use the APE shares to manipulate AMC as well. And as Stephanie tweeted, she said, right now this has put the shorts in a very sticky situation. The shorts have pushed the AMC price so low that no one is willing to sell. So even though the current price would be an attractive price for the shorts to cover, they can't because we have the float locked up. The shorts obviously can't create additional shares to buy those shares to close out of their short positions, because they'd first have to short those shares into the market and then buy them back, which would just put them back at square one. The shorts have to locate either real shares or the synthetic shares they've already sold into the market and buy those back to close out of their short positions. While these shorts can synthetically short sell shares out of thin air, magically creating shares, they can't synthetically buy shares that don't yet exist. They need to be first created fakely through synthetic short selling to then be bought back. There's a reason why there's such thing as synthetic short selling but not synthetic buying. And she said every time they push the price lower, it actually has the opposite effect because apes end up buying more shares. They've spent more than 2 years shaking the tree for low-hanging fruit, aka those paper handers that would sell their AMC shares. All they managed to do was convince 200,000 people, down from 4 million to 3.8 million people, to sell their shares, but no more. Those who were going to sell did so long ago, and the rest of us are now immune to their tricks. Also guys, you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward, which you could always use to buy more shares of AMC, GameStop or APE with Moomoo. All you have to do is sign up to Moomoo using the link in the description below and make a required qualifying deposit. Signing up to Moomoo is obviously free and just requires a temporary deposit, and is a really great way to support me and to support the channel. If you just want that $100 cash reward and 5 free stocks, all you need to do is make a temporary deposit of $100. If you want more free stocks and those guaranteed shares, just make the required qualifying deposit. And that's why Charles Gasparino is back to his usual FUD tweeting, trying to scare off more people into selling their shares. He tweeted saying, "A friend of mine asked last night, saying, are those AMC apes still holding onto that stock after it fell 90+% from its highs?" Now A, I wonder which friend that was, probably Doug Sifu asking out of desperation, but B, Travis had an excellent response. He tweeted saying 3.8 million shareholders have had the majority voting power and the majority share ownership on AMC for 2 years. So we asked, how did AMC drop from $72 per share to $5 per share if 3.8 million shareholders held their stock as of last month and had never sold? He reinforces by saying you can't say that retail sold because that number has stood for 2 years. And on top of that, he adds saying if you're going to say legally short selling, well, the short interest has remained in the 20% for 2 years since January 2021. So based on that legally disclosed short interest, there have realistically been not many new legal short sellers. So if retail investors haven't been selling their shares, and if legal short sellers haven't been adding to their positions, how has the price fallen so significantly? Especially as additional retail investors have been adding to their share counts consistently and constantly over the last 2 years. But obviously short sellers or legal short sellers haven't been adding to their positions. So what else is there left remaining other than low volume algorithms trading the price down with naked short selling, since there's a high FTD count? Again, just some more illegal shorting truths to add to the already massive pile of evidence, especially as the shorts are going to lose another way to manipulate AMC when APE ends up converting. And that is why, as Boss Blunt has tweeted, the average AMC cost to borrow fee is still over 1,000%. The average cost to borrow is still over 1,000%, as is the maximum, and the cost to borrow minimum is still well over 850%. I not only think the lawsuit decision will be announced this week, but I also think this week is the week where we exceed 1,000% cost to borrow fee. Maybe 1,200%, maybe 1,500%, maybe all the way to 2,000%, but I think an increase is happening this week. This is also a really interesting tweet from Nate Anderson, as short sellers are actually starting to be margin called and forced to deleverage. It says Carl Icahn's deleveraging process has begun. Icahn currently has $3.7 billion in personal loans to prop up his risky short positions. He posted 320 million shares of IEP as collateral, up from the 202 million last quarter, and will now be required to pay down all of his loans over the next 3 years. Carl has agreed to provide additional collateral, which will now total roughly $6 billion and include $2 billion of his own personal funds that are invested alongside IEP funds in its hedge fund, and roughly 320 million IEP shares on top of that. Icahn has also agreed to a repayment plan of $500 million in September, 8 quarterly repayments of $87.5 million, and the remaining balance of $2.5 billion 3 years later. Carl Icahn seemingly has really maxed out his leverage, even taking on personal loans in his own name and using that as collateral for his hedge fund. It'd be interesting to see whether Ken Griffin also has massive loans in his own personal name to prop up the Citadel margin requirements. Now finally, I also want to talk about this tweet from Mr. David Neo because I actually don't agree with it. He tweeted saying the first best thing that can ever happen to a stock is moving to the OTC market. And the second best thing that can ever happen to a stock is being delisted from the New York Stock Exchange and from the NASDAQ after moving OTC. This is something I don't agree with because we know just how manipulated the OTC markets are. We know the New York Stock Exchange is manipulated, but OTC markets are an entirely different ballgame. This is the exact reason why Sears, Toys R Us, Blockbuster and many other zombie companies or zombie stocks have never squeezed back up to $10, $15, $20, $50, $100 or above. Yes, we did see Blockbuster run back in January 2021 from 1 cent per share up to about 20 cents per share. But obviously that's nowhere near a short squeeze, and zero shorts in Blockbuster ended up being vaporized. Squeezing obviously to $1,000, $10,000 or $50,000 per share is indeed a squeeze, but squeezing or running from 1 cent to 20 cents isn't anything important. And that is why I do not believe that it's a good thing if stocks move to the OTC markets. That really is when the shorts have won and when bankruptcy has taken effect. But that's why we know Bed Bath & Beyond was the sacrifice for AMC and GameStop to be able to squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.